I think you have to have been living under a rock if you haven't realized that the powers that be and central banks around the world have been talking up the notion of us moving to digital currencies. So you see, to me, that makes intuitive sense that they would allow the cryptoverse to advance in nominal terms, as in the price of Bitcoin going up dramatically, while holding metals in check, because the powers that be, Dunnigan, want to convey the notion that digital currencies are superior to precious metal. And they aren't. But that is what they're trying to instill in people. And I would suggest to you it's that very notion, the reason why Bitcoin has moved up $6,000 while gold's been held basically static. To me, it's not really about crypto versus gold. The anti-dollar trades will all do well. And the fact that Bitcoin's moved up 60% while gold's been held static only tells me that gold is catching up to do, and it will. Gold will catch up. And we just have to be patient. And if you're a holder, be patient. And if you don't own any, you might really want to think about getting some. And if you have very outsized gains in the cryptoverse, you might want to think about diversifying if you don't already hold precious metal.
Welcome back to Liberty and Finance and Reluctant Preppers. This returning guest is very popular with our viewers who always submit a lot of questions ahead of his arrival. This is Rob Kirby. He is a proprietary analyst and the founder of KirbyAnalytics.com, and he joins us this Thursday, November 12th, 2020. Rob, thanks for joining us again.
Pleasure to be with you again, Dunnigan.
Since we had you on last, we've got a lot of inquiries about the state of the physical metals availability and short supply and concerns heading into the December delivery month on the COMEX. So if we could talk first, because you have contacts and you rub shoulders with people who deal with, I'll just say, larger quantities of metals than most ordinary retail investors ever deal with. And if you could give us sort of your insight, your intel from the ground in that arena of what you're hearing is going on with people who are trying to obtain larger size quantities of either physical gold, silver, platinum.
The most recent information that I've received, done again within the last week, is that gold in recent 2 or 3 weeks has become relatively more available than it was prior, and silver remains extremely limited in its availability, specifically as it pertains to Royal Canadian Mint product, be it gold maples or silver maples. Somebody who I'm very well acquainted with is a very large dealer with the Royal Canadian Mint, and his last order with the Mint was for $2.5 million worth of silver maples. He got zero. Gold maples, on the other hand, are relatively available in reasonable amounts. So that's the state of affairs in the physical market in Canada. That may be juxtaposed slightly against some information that you conveyed to me regarding physical availability through your channels in the U.S. But let's just say metals remain still quite restricted in supply, but silver much more so than gold currently. And done again, please understand that can change in a moment's notice. One big order anywhere in the system can really crimp supply very quickly. So
we had Andy Schechtman, CEO of Miles Franklin, talking to us about the fact that the U.S. Mint in West Point, New York, which produces both gold eagles and silver eagles, having, because of COVID restrictions and that sort of thing, having to do either or rather than both at the same time. So they've gone on this has been for a couple months now, this whole allocated, planned, having their major distributors forecast their needs and try to put in their placeholder tentative orders way ahead of time. And people are either getting those filled or not filled, depending on the availability, but both availability of U.S. Silver Eagles and Gold Eagles is restricted coming out of the U.S. Mint as well at this time. So that answers, I think, Old World Order's question on what is the state of the physical silver market for large orders, is supply short, and similarly for gold physical supplies. I know we were also speaking with Australian economist John Adams. He said they were having Australian mints reaching out trying to find if they could help source tens of tons of gold, and they couldn't. They searched a lot of their contacts in Asia and could only come up with like 5 tons out of the 40 tons that were being looked for on the gold side. But I don't know if you have any insight into these larger institutional-sized orders of metals.
Larger amounts of metal, whether it's gold or silver, Dunnigan, are very hard to come by. And there really isn't big amounts of either gold or silver for sale. What I was referencing regarding gold and silver maples has a lot more to do, or is much more skewed to the retail side of the business. But serious tonnage of physical gold and or silver, very difficult to come by. And largely because if one takes a look around, and if one takes a look at the other anti-dollar trades, namely as it pertains to Bitcoin, for instance, it seems to me just 2 months ago I listened to a debate between a crypto specialist and Peter Schiff, who was pushing gold in a very big way, and was very much a braggart about what a superior investment gold was to Bitcoin. And of course, the Bitcoin yogi was saying that Bitcoin, in his view, was a superior investment to gold. My view on gold versus or precious metals versus cryptos, I view them both done again, as I've said many times in interviews with you. I view them both as anti-dollar trades. And my view is that anti-dollar trades will be big winners. But I've also been very clear that I think that the cryptos will lead the rally in the anti-dollar sector. And the reason I say that, it's not because I think that crypto or Bitcoin is a panacea. Not far from the truth in terms of what I think. What I've said is that the powers that be have the ability to sell gold and silver on futures exchange in unlimited amounts. And they do it on the COMEX, they do it on the LBMA, London Bullion Market Association in London, England. And this has been going on forever, and it's referred to as naked shorting. They're selling gold and silver that does not exist and very likely will never exist. But you see, the difference between the metals and the cryptos, there's only one crypto future that you can buy or sell. And it's the Chicago traded Bitcoin future, and its daily volumes and its open interest are paltry compared to the size of the market. And therefore, there is not an appropriate venue or pipe for the deep state, the powers that be. There is not sufficient pipe space for them to flood the Bitcoin market with promises of Bitcoin. You see, Bitcoin's limited to 21 million that will ever exist. And due to the qualities or the built-in features of blockchain technology, it's virtually impossible. And I don't want to say completely impossible, because I don't really know just how much computing power the U.S. government may have squirreled away in one of their dark agencies. and with supercomputers. But basically, the theory goes you can't sell a Bitcoin that doesn't exist. So that would explain why, since this debate that I referenced 2 months ago, when the price of Bitcoin was at $10,000 and the price of gold was at $1,900, we see Bitcoin this morning over $16,000, and gold seems to be mired at the $1,900 mark, having trouble getting traction in nominal price terms. And the reason for that is because futures contracts on the gold and silver market are being sold naked by agents of, I'm going to say, the U.S. Treasury, because it's the U.S. Treasury that has everything to lose if the anti-dollar trades become successful. And I think you have to have been living under a rock if you haven't realized that the powers that be and central banks around the world have been talking up the notion of us moving to digital currencies. So you see, to me, that makes intuitive sense that they would allow the cryptoverse to advance in nominal terms, as in the price of Bitcoin going up dramatically, while holding metals in check, because the powers that be, done again, want to convey the notion that digital currencies are superior to precious metal. And they aren't. But that is what they're trying to instill in people. And I would suggest to you it's that very notion, the reason why Bitcoin has moved up $6,000 while gold's been held basically static in terms of what we can see in the pricing. Now, the prices that are actually being paid for physical metal off market for people who really want to obtain serious amounts of metal, I mean, I've got anecdotal reports of significant premiums being paid for people who really want to get hold of physical metal. And, that's been going on for a very long time, and I expect that to continue into the future because, as we referenced, physical metal is in short supply. And cryptos are reacting as you'd expect, with a very tight supply, and with, it seemingly, to me anyway, new major hedge fund operators are admitting that they've jumped on the Bitcoin bandwagon in recent weeks and months. I guess going back a few months ago, it was Paul Tudor Jones who was an iconic hedge fund operator, stating that he was on the Bitcoin wagon, and that would have been well before $10,000 going up. And most recently, in the past week, we've heard from Stanley Druckenmiller that he's bought Bitcoin after being, very negative on the crypto space for the longest time. We learned that he's been acquiring and he likes the prospects of it going forward. So, but to me, it's not really about crypto versus gold. The anti-dollar trades will all do well, and the fact that Bitcoin's moved up 60% while gold's been held static only tells me that gold is catching up to do, and it will. Gold will catch up. And we just have to be patient. And if you're a holder, be patient. And if you don't own any, you might really want to think about getting some. And if you have very outsized gains in the cryptoverse, you might want to think about diversifying if you don't already hold precious metal. So that's my view on it. To me, it's dollar versus alternatives.
You mentioned in passing a couple of things I want to circle back with you on. One was the COMEX market and the LBMA market. Some people are talking about tightness as far as the ability to fulfill contracts for delivery on those markets. Jerome Janice asks, are we watching gold and silver get pounded so that the December contract settlement due in about 3 weeks becomes a non-event?
Well, the rules that COMEX has changed over the last 3 or 4 months in terms of who is eligible to deliver to them and what degree or state of fineness of product they're willing to accept as good delivery have changed. I mean, a COMEX contract used to be settleable in 100-ounce ingots, period, from a known list of suppliers. Well, as it turns out, due to physical shortage of metal, COMEX has altered their own rules. You see, but I view COMEX as a country club, and COMEX as a country club. A lot of people think it's a public market. Well, it's really a private club, and they make their own rules. Okay, and whenever their viability is brought into question, they just change the rules, in the clubhouse. If you could imagine a country club where they have a rule that you have to wear a jacket and tie to eat dinner in the dining room, but suddenly there's no business in the dining room, and the dining room's going to go bankrupt. So suddenly they relax the rules, and you can wear blue jeans and a T-shirt in the dining room. Well, that's the equivalent of COMEX saying instead of our list of 25 suppliers that have historically or that have qualified to supply us with good delivery metal, we now accept metal from Frank's Scrap Shop, in downtown Hoboken, and it doesn't have to be 3/9 pure suddenly anymore. We'll take scrap metal. We'll deliver anything we can get our hands on. And the reason why they're changing the standard of delivery, Dunnigan, is because they can't procure adequate supplies of the former good delivery standard. And if you can't see that coming, God help you, because that is clear and present and available for anybody who's paying attention to just pick up in passing. So that's the state of the physical metal market. And these powers that be, or I want to call them the deep financial state. These people have a vested interest in keeping or having the appearance of demand for physical metal appear subdued, and they do everything in their power to make or have physical metal appear to be or to have subdued demand. The reality is far from that. The reality is there isn't enough metal to go around for those seeking it, and they've probably done the cryptoverse, a great favor in a certain respect. People that can't get hold of physical metal are, I think a lot of them are turning to the cryptos, Bitcoin or other cryptocurrencies. So, that's the state of affairs. But I mean, I don't want people to take from what I'm saying that I've given up on metal. I haven't given up on metal. Metal, I'm more bullish of metal today than I was 4 months ago. Partly because of what's occurred in the crypto space, and because I believe in the anti-dollar trade, and the anti-dollar trade remains intact.
You just made me think of something. It's been, as long as I've been ever watching the stock market for decades, they always said, like, if earnings season is coming out and you have one industry leader, like, whatever it is, whether it's an airline or whether it's a technical company or whatever, and they announce their earnings, or a bank or whatever, no matter what the industry, you have one of them announce, and if they surprise to the upside, all of a sudden the stock and all the other ones that are in that same sector go up as well, because people see that as a leading indicator for the others that haven't announced yet. Sounds like similar to what you're saying here.
Yes, very much so. And Dunnigan, I do completely believe the metals have a lot of catch up to do, and I believe completely that they will.
On this topic of physical availability, again, Scott Callum says, why haven't companies like Apple, thinking of electronic manufacturers, technology companies that need physical silver, simply bought up? Why haven't they bought up all the remaining physical silver, knowing that it's still very cheap, knowing that the availability is going to be drastically less over the course of the next several years?
My reply there, Dunnigan, is how does anyone know they haven't? I mean, you've got companies like Apple that have hideous amounts of money on their balance sheet. How do we know they haven't, on the sly bought? My understanding, like Apple, I believe has like $190 billion on their balance sheet in cash. So how would anyone know whether or not they've made an agreement with an offtake agreement with a miner to secure supply into the future? I mean, to me, the management of Apple, I think, have their heads screwed on pretty well, and I think that that would be a dereliction of corporate duty and responsibility to not be aware of the conditions of crucial ingredients that go into the making of your product. And my guess is they've probably already, to some extent anyway, they've probably already done that. And they probably have, it wouldn't surprise me that they would have direct ownership in mining concerns that produce the product. So, my feeling there is, that's largely been very likely for the heavy users and the people that require it. I think they've probably already addressed it to some extent anyway. And if they haven't, it wouldn't surprise me at all that they might fear that if they're seen to be buying, there could be recriminations. The deep state, I mean, Apple is a company that I would say is pretty much, most of the tech companies are pretty closely tied to the deep state, or are understood to be pretty closely tied to the deep state. And you don't want to be making public, I mean, if you just don't want to go there. Ask Warren Buffett what it's like when you get bullish on precious metal, as he did when he bought silver in the late 90s. And then he ran into all kinds of regulatory problems with one of his investment dealer investments. I believe it was Salomon Brothers that he had a very substantial stake in. Salomon Brothers suddenly had a lot of regulatory issues because Mr. Buffett was trumpeting, bullish prospects for silver, and had acquired quite an enormous silver stake. And the rumors are that when Mr. Buffett quietly divested himself of this physical silver, there are many in the industry who believe that was the physical seed stock that went to SLV to start an SLV exchange traded fund, which in my view has morphed into a complete and utter diabolical fraud. But that's what I think. But I notice how Mr. Buffett tends to be a bit of a harbinger for things to come in the spaces where he operates. And it's not lost on me that he made a very public and substantial proclamation that he had taken a stake in Barrick Gold, which certainly wouldn't have been my first choice if somebody put a gun to my head and told me to buy a miner. Barrick probably would have been the last on the list for me. But it was first on the list for Uncle Warren. But I mean, Uncle Warren, in my view, is nothing but a deep state asset anyway. So there you go.
Yeah, he's interesting because you see him make what seem to be contrarian moves, maybe way before others do. But then sometimes he'll talk down or against what just the end of last year said or beginning of this year don't sell short America, as he was selling all of his airline stocks. So it's kind of interesting to watch what he does, not what he says. How about platinum? The Face Kisser says, please talk to us about platinum.
Boy, well, look, platinum is rare, much more rare than gold, but platinum does not have a history as being a monetary metal, and platinum is not regarded as a monetary metal. But in terms of its uniqueness and its rareness, it's mined in much smaller quantities around the globe than gold, and why its price is where it is a very, very good question. I find it very interesting, the departure in the difference between platinum and palladium. Historically, palladium has traded, and if you go back 30 years, 40 years, palladium has traded at a discount to platinum for most of those 20, 30 years. And it's only really in the recent 4 or 5 years that palladium and platinum prices have inverted. And my understanding is that a lot of that flipping of, palladium is more rare than platinum as it comes out of the Earth's crust, just as platinum is more rare than gold as it comes out of the Earth's crust. But platinum has qualities, or the platinum group metals have qualities that lend themselves very, very much to environmental concerns. Platinum's used heavily in catalytic converters. But my understanding is that because palladium was trading for so long at a discount to platinum, the auto companies basically rejigged their production to use palladium in their catalytic converter concerns at the cost of platinum, which kind of crushed the platinum market and sent palladium on a crazy bullish run. To me, that makes them both geopolitical hot potatoes. And my personal view is I would prefer to stick to monetary metals, which are gold and silver, ahead of both platinum and gold. But do I see anything wrong with necessarily having a small amount of platinum if one is acquiring or aggressively acquiring metal? No, I think there's nothing wrong with owning some platinum. I just wouldn't load the boat with it. I'd be much more inclined to skew my purchases more heavily to silver and gold.
So if we could turn our attention with your help to this big transition out of LIBOR as a way of setting interest rates. And you talked to us about the LBMA for monetary metals, but what about this? We have a question from Dave Delve who says, thanks, Dunnigan, for bringing back on one of Canada's favorite sons. Please ask Rob how he sees the transition from LIBOR to SOFR, and is this just a continuation of the Ponzi scheme manipulation through the Treasury repurchasing window?
Yeah, well, my views there is that the transition, which has been, I don't know if it's a hard line in the sand or not, Dunnigan. There's been talk of it for a very long time. And the whole issue that we're dealing with here about LIBOR being abandoned, LIBOR is used in benchmarking loans and loan resets in not only corporate loans, but also LIBOR is used for resets on floating rates in interest rate swaps. And, the interest rate swap market is hundreds of trillions of dollars in notional in size. And the floating rate resets, which when a lot of these derivatives contracts were written that the floating rates would all be reset against LIBOR, and deviating away from that contract term creates problems, because is the alternative, or is the new methodology going to favor one side or the other of these pre-existing contracts measuring hundreds of trillions in notional? So to me, it's a recipe for a disaster, and it's a recipe for legal shenanigans, and it's probably a recipe for somebody in a very high place for making arbitrary decisions to advantage certain players in the financial space at the expense of others. And if, in a macro sense, if you want to know what happens when the powers that be make choices as to who's going to be looked upon in a good light or who's going to be looked upon in a bad light, let's just wind the clock back to 2008-9 or 2007, 8, and 9. We saw Bear Stearns go bankrupt because they allegedly were operating hedge funds that were full of AAA rated mortgage paper that failed. First time in the history of credit markets that AAA failed. And Bear Stearns was loaded with that stuff, so they were put under. Actually, they were really absorbed into JP Morgan, if you really want to know the truth. So they were absorbed into JP Morgan, and Lehman Brothers is another example of they were chosen to fail. Now, I can tell you that Morgan Stanley, back in that time frame, was just as insolvent as Bear Stearns and Lehman Brothers. But they were chosen to survive. Okay? They were bailed out. They were bailed out stealth using interest rate derivatives because their swap book expanded by many, many, many trillions over a 6-month period when the Fed was actively shopping Morgan Stanley to the global banking community, trying to get somebody to take them out and recapitalize them. And they couldn't find a sucker to do it. And they shopped really hard. And Morgan Stanley, instead of being acquired or taken out by a bigger player, Morgan Stanley just grew their swap book by, I think it was 8 trillion in 6 months. And that served as the artificial deep state tit that was sucked on to rejuvenate and to recapitalize Morgan Stanley. It's like fishing in a barrel with a dip net. And that's literally how Morgan Stanley regrouped itself and put itself back on the map. Okay, so what we're talking about here, or what caused my rant, is we're talking about what happens when monetary authorities intervene with what should be free markets, or with what we are told are free markets, to the advantage of one player versus another, and this whole switch of LIBOR, the old benchmark LIBOR, to a new measure of rate resets is ripe with, I mean, this is as ripe for fraud and for mismanagement as an election that would be held in a mythological country where you'd have 80 million mail-in votes and voting machines with rigged software. Does it ring a bell?
Well, so what can people watch for during this time? It sounds like, can an ordinary individual expect direct impact to their lives? It sounds like there'll be some winners and some losers. That's one thing we're hearing. Those will be picked based on which ones favor the club, or which ones are playing by the rules of the inside club. But how does that come down? How does that play out to affect the ordinary person?
Well, for the ordinary person, Dunnigan, I think you got to get back to basics. You want to get real, and you want to concentrate. I believe financially, you want to concentrate on the anti-dollar trades, cryptos, physical gold, physical silver. You want to have your preps. Yeah, you need storable food. It might help if you know the people that live in your community and you associate with like-minded people, and you maybe have communications and open communications, and have a direct line of communication with the people around you. And you probably, particularly in the American sense, you probably want to have a means to protect it all. So, this is your language. I mean, I'm singing off your hymn sheet. So
yeah, I got to give you a hard time about your border patrol there, because we were just visiting for the day up in Ontario, and they asked, we were driving across the border, and they said, well, do you have any of this? Do you have any of that? You go, nope, nothing, no, none of that stuff. Any weapons? No. Any pepper spray? Oh, you mean like this one on my keychain that's dangling right in front of your eyes? Yeah, pull over to the level 3 inspection area down there. We had to get out of the car, and these people in flak jackets and automatic weapons came out and inspected our whole contents of our car and found that my little dangling off my keychain pepper spray, which is garden variety, they sell them at every checkout cashier stand and every drugstore and outdoor store here in the States. That was not something you want to bring across the Canadian border. So when you say the American style of ways of protecting, I understand it's more than just pepper spray. But
yeah.
So we have a question. You mentioned cryptocurrencies several times. Voygirl 1954 says, do you see the Canadian government introducing a digital currency to replace the current dollar system in the coming months? And you might as well hit America and the States and Canada in that answer.
In the case of Canada, my view is that our Prime Minister, Justin Trudeau, is going to do whatever he's told. And I don't believe that Justin Trudeau makes policy in Canada. I think that the policy that's being enacted federally in Canada is being dictated by the likes of, let's just say, could be a George Soros in there, could be a Bill Gates in there, could be unknown or unnamed European billionaires in there. Let's just say New World Order. And Justin Trudeau has been a faithful servant to the New World Order. I don't believe that Justin Trudeau has the best wishes or the best intent towards the Canadian public. I think the man is, look, if one wants to know about where Justin Trudeau's allegiances rest, please go to YouTube and Google Justin Trudeau's oath of office when he was sworn in as the Canadian Prime Minister. Because what he did is he vowed to protect the secrets of the Crown, namely the Queen of England, the Privy Council, which is basically the organizational structure representing the Queen in Canada, and all their secrets. So there was no mention about the Canadian public, no mention of his allegiance to Canada. It was all about his allegiance to the Crown, which is the royalty in Britain, and their secrets. And you see, that is unacceptable to me, because I'm a Canadian. I love my country. I view myself as a custodian. I was born into this country that I like. And you see, I view that my biggest job in life is that I leave it as I found it. And I leave it that way for my daughter and for my granddaughter. And because there's no bigger good I could ever do for my legacy and what comes after me than to leave it the way I found it. Now, people like Justin Trudeau have a different attitude and a different idea. I mean, it makes me wonder how he really views his kids, or maybe he views himself as royalty. And coming from the family he does, that wouldn't surprise me if he actually feels that way in the least. But in any case, a cryptocurrency, a national cryptocurrency in Canada, the odds of it happening, do I think for a minute they won't try to do that? No, I don't think for a minute that the Federal Reserve won't try to do that either. My big question is, who's going to buy in? I view it the same way as I view the vaccine protocols that are evolving in front of us. There will be vaccines done again, but are you going to take them? I won't be. Whether you take them or not, I guess that's something you'll have to work out in your own head. And I view the cryptocurrencies, or at least the national cryptocurrencies, or the kind of cryptocurrency central banks would have us participate in. I don't know if they're going to be accepted. So I think they're going to try, but I think you see, if you give someone a choice, you can have the new national cryptocurrency, or you can have an ounce of gold. I think you see most people are going to say, "I'll just take an ounce of gold."
Yeah, but that's the problem, is that in many of these areas we're not being realistically given the same freedom to choose. The free market is being taken away, stripped away, one thing after another, and pretty soon that's the only way you can transact. It's the only way you can travel. It's the only way that you can. So that's one of the concerns. So yeah, my wife and I.
Unless there's revolution.
Yep.
Yeah. So there you go.
A related question from Paolo Suzani says, if one has paper dollars and they introduce digital dollars, what happens to the paper ones?
Well, they'll have. I mean, that's a great question. What will happen to paper currency? I guess in theory, the people who created it can say it's now null and void. Technically, I guess they can. But there again, that raises the specter of somebody saying, if I'm China, and I think they have a couple trillion in US dollars, and if someone says to China, the couple trillion in our currency that you're holding, it's no longer going to be valid. Well, that's a good recipe for a war. So if one makes such a proclamation, my guess would be that they must be ready for war. And that's not really a place I want to go right now. So, if it happens, it's all over. And this discussion is moot, in my view. But that's not a place I want to go. And I would like to think that we don't go there. So declaring paper money null and void, I don't believe is a piece that's in play on the board right now.
You've mentioned miners a couple of times. This is an intriguing question from Jerome Janice. Precious metal miners should lead by example when it comes to holding ounces. As cash positions rise, sitting on large balances over and above working capital and liquidity needs should be held in metal. Why sell the metal and sit on depreciating cash? Furthermore, this should be done very, very loudly to send a message to all market participants.
Well, the answer there is that mining operations are very capital intensive, and sinking a new shaft or doing further exploration on any given ore body requires huge outlays of cash. And typically, mining companies access to cash. Typically, they'll use share issuance to explore. And once they've defined an ore body, a bankable with a bankable feasibility study, typically what happens is they'll use bank finance or debt finance for the capital outlays associated with physically building the mine, because that's the way mining has always worked. Getting companies to change the way the industry works, easier said than done. And anyway, mining concerns that are dependent on borrowing money to enhance or further operations are loath to, take all the cash they have on their balance sheet and invest it in metal. If you have a quote on building or upgrading a mine from a company that is engaged in that kind of work, you're going to get a quote in fiat, not in ounces.
Yes.
And if you don't have the fiat to pay that bill when it comes due, you're out of business. So, and then at the same time, it's a double-edged sword, yes, because then they become captive to banks to maintain certain, loan covenants often come with strings attached,
Mm-hmm.
and can hamper the flexibility of mining concerns. But you see, that's the way the whole system is designed, because the whole system is designed by people who benefit from having fiat money as the money of the realm or the currency of the realm, which they can create at will. And they like to be able to control the price of the offtake, which is the refined product that comes out as a result of the mining operation, because that is a competitor to fiat money, because gold is money and silver is money. So, let's make our money look better than the alternative. And that's what this game is all about.
We've also spoken with some royalty and streaming companies who have sprung up in that ecosystem there to be another option that perhaps mining companies have, and that's to promise their future, a portion of their future metals production in order to get cash now for those operations. But again, that explains that's their metals are being promised away. It's because they need the cash today to buy the equipment and to pay the workers and everything to get the work done. Rob, if people want to find out more about your work and support you, where can they get connected?
You can catch me on the web at kirbyanalytics.com.
Well, Rob, we always appreciate your joining us here. These are confusing times. Things are being presented as upside down or right side up when they're upside down. And you help to turn things around straight again for us. And all of our viewers, on behalf of them and of myself, I'm just grateful for your presence here again on Liberty and Finance.
Been my pleasure, Donegan.
To acquire gold and silver, just go to libertyandfinance.com. When the main site comes up, click on Bullion Sales. That's libertyandfinance.com, Bullion Sales. You'll see my name, Donegan Kaiser, my phone number, and my associate, Kaiser Johnson, his phone number, our email, libertyandfinance@protonmail.com.